Hello traders, Gary Wagner here. It is approximately 11 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 26th day of December 2014, and this is the daily report for gold and silver, her weekend review, and what we thought would be just a very, very quiet Friday turned out to be a pretty dramatic move, I believe, primarily due to short covering, but we'll talk about that in the show. We do have gold up 1760 currently as we go into the close, up about 1.5%. The high 1199.80, the low 1182.40, and as I said, currently trading at 1194 and change. Silver also posting a pretty nice gain, up over 16, but just by a skosh, a 1603 current price bid. We've had the low at 1588 and the high at 1641. You can see that up here, well off the high. More on silver in a little bit. So when we consider the most recent move that we have seen, and this is a pretty dramatic up move, currently trading at 95.82, but what is it really saying in terms of an interim term? Take a look. We've got this one rally beginning of November, 1130 on the bottom, takes us up to 1238. We look at the retracement, in other words, these most recent lows as the market moved back down, and that came to a 38% retracement of this rally upward. So in terms of having some kind of a stair step up or an Elliott wave count, 38% falls into suit. The fact of the matter is we had this one tremendously lower low, but that didn't exceed any of the lows that we had from the beginning of this rally, meaning that this wave was still intact. This wave now, as it comes down, the question is, did we actually find some kind of support in this area? And the other thing that we want to realize is the absolute resistance that we've had in the market. With this market move, 1200 really is where we saw the market stall out, and the 61% retracement is at about 1197. So we can certainly see resistance short term here, support 1172, and then resistance above this would have to be a close above 1200, of course, and then 1213 based on the daily charts and this most recent rally. And when we look at a shorter term chart, this of course is a 720-minute chart, we have identified the fact that we once again have a narrowing of range, a compression triangle of sorts, and when we consider these last highs, we have now had a series of higher lows and a series of higher highs up until this most recent move here. If this move here exceeds this high, that would tell us on a shorter term basis that this rally is still intact. But to do that, it has to get above a couple obstacles. The first one being 1200 to 1213, the resistance that we've identified. And to look further than that, we really want to pull up some longer term charts. And so when we look at a more long-term real view of gold with our weekly chart here, and we identify the fact that when we look at this upper level resistance line, and this intersection right here is that most recent high, the high that we'd have to see taken out. If we were to take that out, that could in fact signal some bullish move in 2015, in the beginning of 2015. However, a failure to do that would take this market lower and below this particular resistance line. So that's really how I am viewing the market coming into this weekend, is I still see pressure, bearish pressure to the downside. Even with today's upside move, it hasn't broken above what I consider to be critical areas before we could deem this last rally a bullish rally, a key reversal, as opposed to a counter trend to the bearish sentiment we've had as we've seen this market move down. Now, take that in light of what we've seen in the dollar today, in oil today, and the stock market today. All three were higher. When we take a look at the Standard & Poor's, that's this is the E-mini. This is a 720-minute chart. You can see we have now breached above the former record historical high right here at about 2080, I believe. Market's now at 2084. So we are well above that. And also, if you recall, on the show we did on Wednesday, we took a look at some longer-term Standard & Poor's. And this is the chart that I'm speaking of. This is the weekly E-mini Standard & Poor's. We talked about the fact that we created a basic fib extension looking at this as a wave 1 move. This is our wave 2. And then this current rally that really began at the end of 2011 being all a big part of a wave 3. That being said, wave 3 will typically be anywhere between 150 and 161% that of wave 1. 150% takes us to 2099, call that 2100. And so we're not that far away, 15 plus points on that. We'll have to see if that creates any kind of resistance on a technical basis. And then ultimately, I believe that the potential for this run on this third wave could be about 2181 based on a 161% extension of wave 1. So if this continues throughout 2015, I would expect continued pressure on the dollar. Excuse me, on gold. And speaking of the dollar, we can see that that has been moving dramatically higher. Look at this close on the week. Closes at 90.30, up absolutely near the highs of the week. So that's a pretty dramatic move. We cannot doubt that. And crude oil was trading under pressure today. So my sense is if those particular trends continue, meaning a stronger equities market, stronger dollar, a continued perception of the eased monetary policy by the Fed, crude oil remaining lower under pressure, doesn't have to move down lower, but not moving up higher, I believe that would create the type of scenario for the economy really to begin to steamroll. That being said, we would see continued pressure in gold. And then finally, my thoughts on silver. We can see silver did move up back over $16. To me, that's critically important. But we're a long ways away from this triple bottom that we breached, which was at around $19 per ounce. We're quite shy of that. My sense is that it will move in sympathy with gold, but at the same time, if we have the equities markets running strong, the industrial component of silver will maybe taper the moves down if or when gold moves down on the days that gold's moving down. This has been Gary Wagner wishing you, as always, good trading. Have a great weekend. Merry Christmas for those that follow that. And I will talk to you on Monday for another daily update and review. Bye-bye.